our first lesson on this company, Tinto Limited. Please, can you see what?
Into, yes.
Can you see it on the board? Okay,
Yes, yes. I have the printout, so
that's good. So look at the Tinto Limited. So the first, they are talking about three factors that are likely to influence value of price of earning ratios. So what are the factors that will affect that are likely to influence the value of what price earning ratios? Before then, the B, they are talking about what? The B, what are they talking about?
the B is talking about the calculation.
Absolutely. So it's talking about a whole lot of things under the B. Okay. So here, when you look at the B, let me take you there. The summary of financial statement. Have you seen the summary of financial statement? Can you see the board
Yes,
is
sir.
the board scrolling?
Yes, sir.
Okay, that's fine. So you have what? The issue shares. Now, when you look at the Tinto is the what? Is the company that we are doing the valuation. And Dingo is a what? Is an industry company. Can you see that?
Yes, sir.
So let me read here. Tinto Limited produces handicrafts for both local and foreign market. The company was incorporated several years. Shareholders of Tinto Limited will now likely to raise investment. In order to arrive at estimate of what they believe the business is worth, what they believe the business is worth, they have identified a long-standing established quoted company, Dingo. Have you seen it? Dingo,
Yes,
which
sir.
has similar business, but however produces for what European market. So here they have another what company called Dingo in the same industry. So now they are comparing their what their finances. So this area is for Tinto and this area is for Dingo. So let's look at the share issues. Tinto 8 million, Dingo 20 million. Net asset of what? Tinto is what?
14.4.
14.4. Now, when we say net assets, how do you understand net assets? Can you explain net assets? When we say net, do you understand it?
Yesterday, you were telling me net asset is telling us about the total asset minus total liability.
Thank you very much. Plus preference shares. So here, when you look at
Uh-huh.
this one, they've
So,
already
sir, that preference share, is it a dividend paid?
no. Preference shares. It's not dividend. It's our preference shares. That's all.
Okay, thank you.
Now, when
Thank
you
you.
look at this one, you see the net assets here. It means they've already done the calculation for you, so you don't need to do any further calculation. Do you understand?
Good.
Ah.
Thank
So
you.
now you've seen the Tinto Limited is what? Is the net asset is this. Now, here's the earning per share. They've already calculated the earning per share for both companies. Dividend per share. They've already calculated the dividend per share for both companies. Debt to equity ratio. They've already calculated the debt to equity ratio for both companies. And then
Share price.
price shares, share price. Tinto is 0, and then what? Dingo is 1.6. Why is Tinto 0?
That is a listed entity.
Why is Tinto 0?
Tinto is zero. The share price is zero.
Because
I am of the view that it is because that is the base.
no, Tinto is 0 because Tinto is not in the market. It's not in the market, so we don't know the market price per share of
Right.
Tinto because it's unlisted company. Do you understand? But Dingo,
So I'm coming.
okay.
So in the question, it means Dindo is the listed.
Yeah. Oh, I've already told you. Yeah.
I've seen it.
Tinto
And
is
Tinto is
unlisted.
on.
Tinto is unlisted. Dingo is the listed
Thank
company.
you. Thank you. I'm putting it there.
Now, when you look at this one, Tinto is unlisted, so we will not have the what? The share price.
The price.
You understand? But the Dingo is
Yes,
already a
sir.
listed company, so you will have it. Okay. Now, when you come here, expected rate of growth in earnings or dividend, 5%, 5%. Now, the additional information here, the net assets of Tinto Limited are the net book value of tangible non-current assets, including working capital. However, a recent valuation of the building were 1.5 million book value, above book value. An investment field which is designed as equity financial asset at fair value through profit and loss with carrying amount of what 1 million is fair value at what at 1.1 million. Due to dispute with one of their clients, additional allowance for bad debt of 700 will prudently be made. Okay. An item of plants with carrying amount of 800 is assessed to have value in use of 100 and 760, and then fair value to sell is what 790. This is purely standard. And this standard is under IAS 36,
Okay.
right? Impairment. Okay.
Okay.
Now, number 2, growth rate should be assumed to be constant per annum. Tinto Limited earnings growth rate estimates are provided by what? By the marketing manager based on expected growth in sale. Adjust by a normal margin. Dingo Limited growth rate are gleaned from press report on expected growth in sale. Dividend yield of Dingo Limited approximates its cost of equity. Underline here. Dividend yield of Dingo Limited approximates its cost of equity. Underline this. Okay. Now,
Okay.
they want you to what to require. They want to use use the following method to do the calculation: net asset method, price earning ratio method, and dividend growth method. All right. So, are we okay?
Yes, sir.
Do you have the question?
Yes, sir.
Okay. So now let me go straight into the calculation.
Sir, let's assume it's exam. How do you start it?
Yeah, we are coming to start it like the way I'm writing here.
Okay.
So you follow what I'm coming to write. So first you mention the what? The company name.
Thank you.
So here you will have business. Valuation of Tinto Limited. This one, the limited, you write it in full. Then you underline. Now, then you start with what? The first method is what?
Net asset method.
Net asset method. Are you following?
Yes, sir.
Good. The net asset method, then you put the formula. So the formula says what? Can you remember? So the formula
Net
says,
asset.
no,
Net
the
asset
formula
equals
says total assets less what? Total
total liability.
liabilities plus what? Plus preference shares
all over.
all over what? Equity shares or what? Number of what? Beautiful. That's all. So you put it this way. They will mark it for you. Okay. So when you are done, then you come here, then you come and write net assets. How do you determine the net assets? Right? You underline. Then you start quoting the what? The net assets. Please are you with me?
Yes, sir.
Good. Then you start quoting the net asset. But when you look at this very question, they have already calculated the net asset for us. Are we seeing it? They have already calculated the net asset for us. Can you see it in the question? Please check.
Yes, sir.
After the shares, you realize that they've already done the calculation for the net assets.
14.4
Good. There you
and
put it.
30 for Dindo.
So per, then you write per account. Right? The net asset is what? 14.4. Yeah, then you what? You put it because it is in millions, right? So yeah, you can put it up here. Millions, right? So that this one will be 14.4 million. Are you with me? Okay. Are you following?
Yes, sir.
Good. Now, after you are done with this, what do you do again? Now, let me take you back to the question. This question, that is the nature of the question. Let me take you back to the question. After you are done this one, the next thing you do is that when you look at the table, there's nothing again with regards to assets. Can you see that? There's nothing again to talk about the assets. Can you confirm
Yes,
that?
sir.
There's nothing there
Yes.
to talk about the asset. So go into the additional information. What is the additional information saying? Are you with me? When you look at the additional information, watch here. He said that a recent valuation of the building were what? Were 1.5 million above book value. Have you seen it? This is what we call revaluation of what? Of the assets.
Above.
Above book value. So here, what this means is this. Here, what this means is this. He's talking about a certain asset, right? He's talking
Yes, sir.
about a certain asset. So I will not switch again. So when I want to I'll ask you to what? I'll ask you to I'll ask you to read it from the
Thank
question
you.
for me so that we can work faster. Okay. Okay. So a recent valuation of building. So here, what they mean is that, can you see the board? There is a building. Are you with me? Please, are you
The
with
board
me?
is gone.
Oh,
It's come.
okay.
Yes, sir.
Is a board here? Can you
Yes,
see the
sir.
board? Uh-huh. Okay, all right. So now, have you seen the building? So have you seen the question?
Yes, sir.
The question is saying that there is what? There's a certain building which has what? Which has what?
It has a current amount.
Valuation of building were 1.5 million above what? Book value.
The book value, that is the
Do you
current
understand?
amount.
So that is what we call. So here they are talking about what? Valuation. So that asset, this building is part of what? Is part of the net asset they've already calculated here. Do you understand? Assuming
Okay.
we didn't calculate
Okay.
it, we would have done the we would have picked the would have picked the would have picked the revalued amount in the preparation. So assuming like you have maybe a building, you have this building. The building, the original value is what? And the revaluation value. So original value is maybe 10 and the revaluation is 15, right? So when we're coming to pick the building values, we would have picked this one in our calculation to determine the net asset. Are you with me?
Okay.
Good. But in this is that they've already done the calculation for us, but they are telling us what? They've given us what? Further additional information about what? About the asset that they have. So when they've already calculated it, then we will come and do our what? Adjustments. Do you understand? So here they are talking about what? There's a building which has what? Which has valued above. So the moment you see above its book value. Above book value means that probably the asset value, the original value, and the revaluation. Maybe the example, like maybe the value could be what? 20 million, and then it has what? It has valued more. Now the current value is what? It's 35.
35. So
So the
15
difference
difference.
become what? 15, so which is 1.5 million. So we have seen that it is above book value. So this is the book value.
Yeah.
So it is what? Now the current value of the asset is what? 15 more than the what? Its original value. That is the meaning of that.
Okay.
Are you with me? Aha.
Yes, sir.
Aha. So once that has happened, what do you do? Then you need to adjust it. So this is what we call revaluation what? Gain on what? On the asset. Are you with me?
Yes, sir.
Good. So with this one, all you have to do is that you come here, then you say what? Revaluation gain. Because they've already calculated that it is above book value of what? 1.5. Are you with me? Okay.
Yes, sir.
Now let's go to the next item. What did they say? The next item is talking about what?
An investment held which is designated as equity financial asset
Good. And you
at
know
a
that,
fair value through profit and loss
okay,
with a current value of 1 million is fair valued at 1.1 million.
okay, that's it. You see, this one is the reason why, like I always admonish that you should what? Your like you should grow in understanding standard. This thing that we are seeing that is full standard issue. So when you look at the first one, this one is under IAS 16 PPE. Now the second one we are coming to do is what? Under IFRS
9.
9, right? So this one is what? IFRS 9. Okay, fine. So let's move. So here they are talking about what? Investment of what? The investment, what did they say? So the
Say
investment,
an investment held which is designated as equity financial asset
aha,
at a fair value through profit and loss.
good. So it means they are reporting it through profit and loss account. It means they are talking
Yes, sir.
about gain and losses of this investment to pass through profit and loss account. That's all. It's a reporting what? requirement be chosen to what? Because when you look at IFRS, we have 3 methods of what reporting it. You understand? But here they have chosen what P&L what reporting, right? So when
Yes,
there's a
sir.
gain, they will treat it there. When there's a loss, they will treat it on a P&L. Are you with me? So here,
Yes, sir.
remember this investment is what will the investment value will pass through a system of financial what position. So here they want to tell you the original investment as the initial investment value was how much? 1.1. 1 million. Are you with me? Are you with me? Are you with me? Hello?
Yes, sir. That is 1 million.
1 million.
Yes, boss. I'm with you.
And they said that later on, what did they say? They said that what? The fair value of the current the fair value of the asset has now moved to, so you see what the fair value,
1.1.
1.1 million. So here, is it gain or loss?
This is gain.
So which is called fair value movement, you understand? So fair value movement, or if you don't want fair value movement, you can say it is what? You can say what? Fair value gain or loss. So because this one is gain,
That
you
is
just put gain. So
that is
here,
0.1.
so that's 0.1 million. So here, you will bring it here. You can say fair value gain investment, which is what? 0.1. Okay, let's move. The next one is what? First.
Due to a dispute with one of the clients, an additional allowance for bad debt of 750,000 could prudently be made.
Okay, so here they are talking about what? So this one is what? Provisions. You understand? This one, the next one is
Yes, sir.
what? Is provisions. And the provisions on what? On debt. We want to look at this one. He's talking about what? It's a additional allowance for bad debt. So bad debt is what? Calculated on what? On your what? On your debtors.
Yes.
Do you understand? And debt, what do you call it?
Yes, sir.
And your debtors are also part of what? Assets. Is that not the case?
Yes, sir.
Good. But this one is current asset. The above two are non-current asset, but all of them are assets. Are you with me? So yeah, they are talking
Yes,
about
sir.
additional provision. So additional provision, which is how much? 0.7 million. That's what they said, right? Please, are you with me?
Yes, sir.
So if they are creating, watch here. If they are creating what? Provision. Are you with me? When you are creating,
Yes, sir.
when you are doing profit and loss account, watch here. Whenever you create provisions, where do we treat provisions? You understand? You should answer.
Provision
Where do
goes
we
to,
treat? Come again.
but is it not P&L?
We will take it to P&L and corresponding entry will come to where? We will go where?
Then that will go to current liabilities.
Thank you. So that's what we call a provision for what? Doubtful debt, or provision for bad debt. Please are you with me?
Okay. Yes,
So
sir.
if it is a liability, so when you create such provision, where will it go in your what? In your net asset when you are calculating this? Where will it go? So
If
it
it's
will
a liability,
it will be what? Provisions. Provision for what? Bad debt. How much? 0.7 million. So you put it in brackets. Since it's a liability, you put it in brackets. Are you following me?
yes, sir.
Thank you very much. What are you eating?
Something like that too. Since
Okay, no
morning.
problem, no problem. Once you are following, that is fine. So we are done
Yes,
with
sir.
we are done with this one. Let's move to the next one. The next one is what? What an
An
item?
item of land
Yeah.
with a current value of 800,000 is assessed to have value in use of 750,000 and fair value less cost to sell of 780,000.
Thank you very much. So here, this we call it impairment. IAS. This is IAS what? I said this is what IAS.
36.
That is impairment, right? So under the impairment, these are what we look. We look at the carrying amount of the asset. You look at the carrying amount of it, then we look at what you call, and after you had your what your carrying amount, then you look out for um the what do you call
Value
value in use.
use.
Then you look out for what fair but less cost to sell. We look out for these three items. So here, when you look into the question, the carrying amount is how much?
Carrying amount in the statement is
800.
800,000.
So you have 800,000. And then value in use is how much?
Value is 760,000.
760,000. And then fair but less cost to sell is how much?
780,000.
Good, 780,000. Now, in the standard in the IAA standard, when you are confronted in this situation and the IAA statistics, all you have to look at you compare these two. You will compare these two and identify. You want to check whether the asset is impaired or not, and identify among the two which one is of higher of value. You understand? It means that if they continue using the asset, this will be the value of the asset. If they say they want to dispose of the asset, this is how much they can generate out of the asset. So you compare the two, which one is higher of value?
780.
Good. So here, when you are done, then you bring your carrying amount, which is what 800,000. Then you compare it with the one with the highest value. So the moment you identify the one with the highest value, we call it what? Recoverable amount. And the recoverable amount is what? 780,000. You compare the two. How much is it? It will be 20,000, right?
20.
Then so the
20.
20,000 is what we call impairment. So since it is an asset, when you are doing your valuation here of your net asset, it will come here as what? Impairment. And the asset is impaired by what? 0.2. That's all. Any question up to this point? We are done with the additional
No,
information.
sir. No, sir, I'm coming. Sir, let's go on.
Okay. So now
Then next one.
we are done with additional
Next
information
one is
under the
about
net
growth rate.
asset.
Next one is about growth rate.
No, so here we are only interested in what asset related matters. So we are done.
Exactly.
So the other matter is related to other different matters. So when you are done, then what? Then you sum it up. That's all. Well, the rest of the information has nothing to do with assets. So you sum it up. So when you add it, what do we have?
Sir, I am doing it. 15.05.
Thank you. So 15.05. Like this.
Yes, sir.
Okay, so that is what you had. So this is the what? Value of what? Of the business. Are you with me?
So value per share.
No. This is the total value of the business, not value per share.
No, I'm saying that we are going to find value per share.
Absolutely. So this is the total value of the business. So now, how much is the share of the what of the company? Check. In it, how much is the total share of what of the company? Tinto company. What is the total share of the Tinto company?
Into is 8.
Thank you very much. 8 million. So here, so if you want to know the what value per share, you know what to do. So that gives you what 15.50 by 8. What do you have?
I'm coming. Divided by 8. 1.88.
1.9. Let's assume. So now we are done with what with the first one, right? Then you move to
Yes.
II. The II, what did they say?
The II is price earning method.
That is a PE ratio, right? Now you know your
Yes, sir.
PE ratio. I've already taught you that when you have it, then you quote the what? The formula.
The formula.
So here you don't need to. So all you have to do is that if you want to, if you've forgotten the straight away, you can do it systematically. So you arrive at what? At the formula. Do you understand? So here I remember the formula straight away. So I'll pick what? Market price per share. If you can remember, then you can do it systematically. Do you understand? Market price per
Yes,
share
sir.
is equal to what? PE multiplied by what? Earning per share. Are you with me?
Yes,
If you
sir.
can't remember, you can do it systematically as we did yesterday. Okay, so now
Yes, sir.
you know there's a formula. Now let us first determine our earnings per share. And we know that our earnings per share is what? Profit after what? After tax minus
Sir, I'm
what?
coming. Oh.
Okay,
Among these two formulas that we have there,
okay.
the PE ratio and then the earning per share, which
Now,
of them is for um, the listed and then the unlisted?
oh, Charlie, you've missed the whole game. Oh. Where are you? Where are you? Where are you?
No, I just want you. Let's go on. Let's go. I'll get it.
Uh-huh. Because we've elaborated this one yesterday. Oh.
Yeah.
We've not
Let's
we,
go
we are
on.
not we are not so when you get to this point, you now define it one by one. When we get to whatever
Yes,
you want to get, we will deal with that matter.
we'll get
Right.
it. Let's go.
Now you
Let,
now now you look
let's go.
now you look for what? You look for your earning per share. And your earning per share, how do we get your earnings per share? Right? So how do you get your earnings per share?
Profit after tax minus preference share
All right. So how do we get
over
our so good. So how do we get our profit?
the
Are you with me?
profit. We have calculated it.
So how do we watch here? Follow me here. It's not easy. Oh. You should be very careful. How do we get our profit? So here, when you find divided by what? Equity
Number
share.
of
Now here, follow me here. This question, like the way they couch it now, is the reason why you should what you should solve so much question of this thing before you finish. Because
before.
sometimes you go and see the question and it will, I mean,
It will
you
elude
can
you.
you understand. So here, when you look at the question, where do we get our what our profit after tax, right? Well, when you look at the question, did they give you any profit related matter here? Check it. Did they give you profit?
No, we don't have profit.
Did they give you P&L?
No, we don't have
They
P&L
didn't give you
anywhere.
P&L. So in this instance, how do you get the earnings to do the calculation? How do you
Yeah,
get
which is
it?
the same as we have earning per share,
Mm-hmm.
but no earnings.
All right.
Can we
So watch here.
can we use the formulas there?
You say, can we use what?
The formula is there.
So here, let me. So now they've given you in a question. They give you what? Your earnings per share. Your earnings per share as they giving you, or your earnings. So let me put it that way. Was per the question they've given you what? Your earnings of how much? How much earning did they give you?
Tinto is 0.35.
0.35. It means, do you understand what it means? It means that because once they've given you earning per share, so when you look at the question, they're giving you earning per share. So when we say earning per share, what do we mean? Are you with me? What do we mean by
Yes, sir.
earning? So the earning per share means that you have your what? Your net profit after tax is what we call earnings. Earnings. Do you understand? So then they divide
Yeah.
it by number of shares. That gives you what? Earning per share. So if you want to
Okay.
find out, if you want to know your earnings, actual earnings, you will pick your earning
Then you
per
have to
share.
multiply.
Earning per share 35.
Multiply by.
Then you multiply by the number of shares that you have. That gives you a total earnings. How much?
I'm coming. 0.35 times 8. 2.8.
2.8. Are you following?
Yes, sir.
Now 2.8 is giving you what? Your earnings. Now when you are done, then you will come and do a certain adjustment.
Okay.
Now the adjustment, then you follow me here. When you are there, so whenever I'm teaching this one, I always admonish students that you should be mindful here. When you're doing price
Okay.
earning ratio, your earning, your total earnings, all at all times, it will be adjusted. And in most cases, the adjustment will come from what? The net asset item that you've listed. Some of the adjustment will have to go to the earnings. Now, what's some of the adjustments? Some of the
We have
adjustments.
revaluation.
Yes, no, watch here. No, no,
Revaluation
no, no, no,
gain.
no, 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 no. Be very careful here. Be very, very careful here.
Okay.
Watch here. The only adjustment. Watch here. The only adjustment that will go to the your earnings will be the item that will affect your profit and loss account.
Okay.
You understand?
Yes.
Revaluation gain doesn't affect profit and loss account. This one is go to what we call OCI.
OPI. Sure.
So it will not affect your profit and loss account. This fair value gain, they've already told you in the question that it is what? They are reporting it through what? Profit and loss account. Have
Profit
you
and loss
do you
account.
remember?
Yes.
So this one will go to P&L, so it will affect it.
Sure.
Now, this is provision for bad debt, and I told you that provision of bad debt goes to P&L and affect what? Your statement of financial
Profit.
position as well. You remember?
Yes, sir.
And then impairment. And impairment, IAS, that is what? IAS 36
36. Also
affect what?
P&L
P&L, and then what? In the system of financial what? Position.
position.
So you should be very mindful of that. So these are what affect these. So when you are coming to do the adjustment, then you bring your what? Your revaluation, your
Fair
fair
value
value
gain.
gain. How much?
Fair value gain is
0.1.
giving me
And then you have
1.
your what? Your provision, which is how much? The provision is 0.75.
0.75.
And then you have your also your what? Your impairment, which is how much?
0.2.
0.30. So you do the math. What do you have? You have your what? Your
Coming.
price and
I'm coming there.
your
2.8 plus 0.1 minus 0.75 minus 0.2. 1.95.
do it again, my brother.
2.8 plus 0.1 minus 0.75 minus 0.2. 1.95.
No, I think we've made a mistake here. This figure is 200,000. So here should be 0.2. Right? This figure should be 0.2. Because when you did this and that provision was how much? 200,000.
Yes.
So when you convert it into millions, it should give you
0.02.
yeah. So this one is 20,000. So it should give you something like that. Okay. Now you can do your calculation again.
Okay. You coming over. Aha, 23.
So now go back and then work this one out.
I'm coming. Let me go there. 15.23.
No. Stop that
divided
one.
by.
Come here. Work on this one, please.
Okay. Okay.
Work on this one. The up there is okay.
Okay. Point 02. Okay. 2.8 plus 21 minus 1
Come again.
3.
2.13.
2.13.
Go. So this becomes your what? Your total earnings, right? Your
Yes, sir.
earnings. Okay. So now if you are
Yes,
looking
sir.
for is there any when you look through the question, is there any preference dividend in the question to be paid? No, if there's nothing, then you look at our shares. How much share do we have? 8 million, right? So we can now have our earning per share to be how much? Your earnings per share will be how much? Hello? Hello? Hello?
8
Hello?
million. Yeah.
So your earning per share will be what? 2.13 divided by 8. What do you have? Hello? Hello, sir.
Divided by. It will be the earning per share.
Yes.
0.26.
All right. So that gives you what? 0.2
Hello,
0.26.
sir.
Yes.
Hello, sir.
Yes.
0.26.
Okay. 0.26. So that
Do
gives
you?
you okay. All right. Hello. So now can you hear me now?
Yes, sir.
Okay. So now we've found our earning per share. Are we okay? Are
Yes,
we?
sir.
So now we are now left with what? PE ratio. Are you with me?
Yes, sir, boss.
Good. So now we know we have this one. So now we are left with what? Our PE ratio. So under the PE ratio, let's look at Tinto. And let's look at Dingo Limited. So in the question, check the PE ratio. Did they give you PE ratio for the unlisted? You see here, so that's what you wanted to find out. Tinto is unlisted, and then Dingo is the listed company. Don't forget about that one. We will free
Yes,
everybody,
sir.
then you are dead. Yo. Now,
Okay.
let us look at it. Tinto Limited and Dingo Limited. Let us check if they've given you the PE ratio for both company. Check in the question. Did they give you?
No.
They didn't give you. So how do
Yes.
you find it? You understand? So
That-
once they didn't give you, then what you have to come and do here? What you have to come and do here is that you will find what? The PE ratio of a Dingo. And then the PE ratio is what? What is the formula for PE ratio? PE ratio is what? Market price per
Market
share divided by what? Earning per
earning
share.
per share.
Right? So here you will say, you label it what? Dingo. Dingo Limited. Now, when you follow it, market price per share under the Dingo is how much? Check in the question. What is the market price per share?
Market price per share. Share price
Share price
1.6.
1 point what? Good.
6.
1.6. And what about earning per share for Dingo? That's how much?
Earning 0. Oh,
Oh,
no. Earning per share for Dindu.
yeah, Dingo.
And that is 0.28.
0.28.
Yes,
If
sir.
you divide it, what do you have?
I'm coming, sir. 0.57.
0.57.
Yes, sir.
So now you have seen that now we now know the PE ratio for what? For Dingo to what? 5.7. Now we can now
Yes.
use this one to what? Define the what PE ratio for what? For the unlisted, what is Tinto Limited. Right? So
Okay.
here, did they give us a marketability risk ratio?
Marketability risk.
Did they give us?
No. So 20 to 25. They didn't give us.
They didn't give you.
Yes, sir.
So what do you do?
We assume.
Hey, they didn't give you. So if they didn't give you, if you are assuming, which value are you going to use to do the assumption?
20. 20. I'll use 20.
You use 20. Okay, so if you use
Yes, I
20,
don't want problem.
so if you use 20, so how is it going to be? You are going to be what? 5 point what? 7 multiplied by how much?
By 20, this is P. So we bring it down.
So what do we do?
So we less the 20 from 100.
So what do we do?
So it will be P will be 5 point times 80%.
Okay, so what do you get?
Coming. 0.457.
So that gives you 0.457. Oh, calculate it well.
Coming.
0.457 per. You say 0.457. No, it shouldn't be 0.457.
Yes. 0.45.
No. 80%
So
of
check it.
80% of what? 5.7 is how much? You understand?
5.7. Check it, sir.
Hey. No, I'm not sure. 80% too.
Sir, it is not 5.7. It is 0.57.
No. When we divide this one, when we divide
Yes,
1.6 divided by 0.8,
2.8.
it's how much?
0.57.
Hey, sir.
Uh, uh, 0.57.
Oh, sir.
Do it and see.
No, so me need calculator how. So I'm just following your answer that you have provided. And what was saying? Let me check.
0.57.
Okay, let me see. That be maybe you know 1.6 divided by 0.25 give me 5.7.
Is it 0. It is 0.28.
Yes,
I'm coming.
it gave me 5.7.
I'm coming. So we are right.
Okay, so now when you do the way into the
Times
numbers
80%. 4.5.
4.5. Okay, so do you understand?
Yes, sir.
Now after you are done this one, what do you do? So you now you have your what? NPS to what? PE multiplied by what? Earning per share. So here you can comfortably have your figures. How much is the PE? The PE is what? 4.5 multiplied by earning per share. The earning per share is how much?
Earning per share is what we have calculated. We had 0.266.
0.2, so 0.27. So when you multiply, what do you have?
1.22.
When you multiply, what do you have?
1.22.
Ah,
Uh,
okay. 1.22.
we can make 1.2.
Okay, 1.2. So this is what fair what called NPL. But if you want to find the total business value, you can also do, which will give you what? 1.2 multiplied by 8. You remember? So that will give you the total business. So this is the number of shares. So you want to find total business value. So you multiply by this one to give you how much?
So why are we multiplying?
No. What we have done here is correct. We are done. But I want you to know that if you want to find the total business value.
Okay. I understand.
So the total business value,
I get you.
1.2 times
I
8 will
get
give you
you.
how much? This
I
one
get
is,
you.
I'm just adding it. It's not compulsory to do.
9.5.
Okay, so 9.5. Okay, so let's move. Then the next one is what, please?
Dividend growth.
I. Dividend growth method. Now, when you look at the dividend growth method, when you are done, then you put the formula. What did they say? Dividend growth method, the formula is what? Dividend per share into bracket 1 plus growth, all
G
divided by
over
what? KE minus what? Minus growth, right? So, yeah, when you are done, then you have to come and then start what? Bringing it one by one. So, dividend per share in the question is how much? Please check. Dividend per share for Tinto Limited is how much?
dividend per share for Tinto is 0.20.
Okay. Yes. Okay. So it is what? 0.20.
Yes, sir.
All right. So 0.2. Okay. And what again? Then we look for what again, please?
We
The
calculate
formula is there. So
the growth,
we calculate for what?
the growth.
The growth. So check the growth. Check the question. What did they say about growth?
I'm saying it here.
They said the growth is
Expected
what?
rate of growth
Is how much?
for Tinto is 5%.
Mm-hmm. For
Indo is also 5%.
so the Tinto is 5%. That's all. We are interested in Tinto growth. And what again?
Then we have the cost of capital,
Which one is cost of capital?
KE.
I'm coming up.
Okay, sir.
Let's have patience. Um, KE. Okay. All right. So we are done. So we are done with what? So we have KE. Now KE for. So here also here. So this one belongs to Tinto, right?
Yeah.
This one belongs to Tinto Limited, right? Hello, please, are you with me here?
Yes. Yes.
This one belongs to Tinto Limited, right? Please, your background will not see a bit.
My brother is closing the gate.
Okay, all right. So here, let us follow me here. So we have what? Tinto, and we have Dingo.
Thank you.
We have Dingo Limited here. So here, one, we have what? Dividend per share. Dividend per share for both. Right? Okay, so
Yes,
let's look
sir.
at the dividend per. So dividend per share for this one it was 0.2. Now,
Yes.
and then we also have dividend growth. This one is what? 5%. And this one to growth is also what? 5%, right?
Yes, sir.
Good. Now, when you dividend per share for Dingo is how much? Can you see? Can you identify that?
Dividend per share
Yes.
for Dindo,
Dingo.
0.24.
Okay.
For 0.24.
Dingo 0.24. Okay. Now let's look at KE for both. KE for Dingo is how much? KE for Dingo. Tinto is how much? We don't know.
Okay.
They didn't give us.
Yes.
Right? Now, KE for Tinto is how much? I'm listening now, sir.
KE 14.2.
Yes.
So I'm not seeing anything though.
So there's nothing like that there, right?
Mm.
There's nothing like that there, right?
Yes, sir.
Good. Now let us go into. Let me show you. Go to the question. You remember that I said you should underline something there.
Yes. It made me underline the third this thing.
So
The
read it.
dividend yield of Dindo Limited approximates its cost of equity.
Good. So here, what they mean here is that, watch here. AE is equal to, what did they say?
R
No, what did they say?
RF,
Approximate dividend yield.
yes, there's a dividend yield of Dindo Limited
Dingo.
approximates its cost of.
Dingo Limited.
Uh-huh.
Do you understand? Have you understood that statement?
No, sir.
They are saying that KE for Dingo Limited, the one in the industry, is equal to dividend yield. Do you understand now?
Yeah.
What they want to tell you is that KE, cost of capital, the cost of capital, the KE you see over there is cost of. Have you forgotten what I taught you? Cost of capital, KE. I said the cost of capital. You understand?
Equal to RF plus. Yes, I remember.
You understand? So the cost of capital, whatever you've seen there, that cost of capital is the same as KE. Do you understand?
Yes, sir.
And they are saying that cost of capital is equal to what? Dividend yield of what? Dingo Limited.
Okay.
Do you now understand?
Yes.
Aha. So cost of capital is equal to a dividend yield of what? Dingo Limited. So all that they want you to know is that if you know the dividend yield of what? Dingo Limited is the same as what? Is the same as
The
what?
cost of
Cost
capital.
of capital. Do you understand? So here, let
Yes,
us
sir.
find the what? Dividend yield of what? Of Dingo Limited.
Dindo.
You understand? So the dividend yield is what? Dividend what? Per share divided by what? What's the formula?
My dad, the market price per share.
Market price per share. You understand? So go into the question. What is it? Do you have dividend per share for what? For Dingo?
Dividend per share for Dingo, yes.
It's how much?
Um, Dividend per share is 0.24.
0.24. And the market price per share is how much?
1.6.
1.6. When you divide, what do you have?
Um, 0.15.
Good. So 0.15. You understand? So in the question, they
Yes,
said
sir.
that dividend yield of what? Of Dingo is equal to what? Cost of equity, which is KE. You understand? So here
Yes, sir.
we now know the what? We know the KE or dividend yield of what? Of Dingo to what? 0.15. So once we know the dividend yield or cost of capital of what? Of Dingo, the listed company, we can now use that one to what? We can now use that one to what? To know the what? The cost of capital of what? Of
The unlisted.
the unlisted. You understand? So how do we do it? You remember, once the thing is dividing, the adjustment will what? Will be adjust. You do the adjustment upwards. You understand? Because when you look at the KE is what? Is dividing. Have you seen it?
Yes.
So if you want to find the what? You want to do the adjustment to find it corresponding here. So what do? You have to also adjust it what upward. So here, once you know this one and you want to find a unlisted one, all you have to do is that you adjust it upwards. So if you adjust, you see the earlier one you use 20%. When we are doing the PE, you remember that we use 20%. You remember?
Yes, sir.
So you don't change the percentage that you use for the
The value.
adjustment. It will be consistent. So here, all you have to do is that you adjust it upwards. So wherever you have what 100 plus what
Plus
20.
20%.
You
120%.
understand? So that gives you 120%. So when you are doing the adjustment upwards, what do you have? So you will have what 0.15 multiplied by what 120%. What do you have?
0.18.
Come again.
0.18.
0.18. Okay, so when you
Yes,
have
sir.
what 0.18. Is that the case?
Yes, 0.1. Yes.
Okay, so 0.5. So that means now we know the key of what of the unlisted to what to be 0.18. This one. Simple. So once we are done, we can now calculate our value per share. So here you will have what value per share will be what dividend per share plus 1 plus G all divided by what KE minus what minus growth. So how do we go about it? So you have dividend. How much is the dividend per share, please?
Dividend per share of that is
Unlisted
the
is how much?
unlisted.
Yes,
20.
0.2. So
Yes.
20
0.2.
into bracket 1 plus growth. Growth is 5%, which is 0.05. All divided by KE. The KE we just found, which is 0.18 minus what? Growth of what? 5. So what do you have?
Camino. 1 plus 1 times 2. So I'm coming. 2.1. So 1.6.
1.6. So that is it about that. So that is all about this question. Is it
Thank you.
difficult?
It is the standards.
Yeah. So
The issue is about the standard.
you take note of all that. It's part of that. It's part of the questions. It's part of the question. Any questions so far? Where we've gotten to?
Yeah, I'm okay.